Hey, welcome back to the YouTube channel. In today's video, we're going to be discussing buying a property under $400,000 here in Southeast Queensland. A lot of people are struggling to get borrowing capacity with the cash rate increasing over the last 12 to 18 months and most interest rates sitting around that 6 to 7% mark at this point in time. A lot of investors are struggling to break into the property market and to continue to build their property portfolios. So in this video, we're going to be doing a recent client purchase breakdown, discussing the numbers, so what they paid for the property. I'm going to share with you the address, so that will be revealed exactly where we purchased this property. And in actual fact, we didn't buy a house in this case. So make sure you stick around to the end of the video where I reveal the address, and let's break down these numbers and this recent client deal. So on screen here, we have a 3-bedroom, 1-bath, 1-car unit. Now the clients looking at this property purchase had a limit of around $480,000. And with the interest rate rises and working with their mortgage broker, which was backstaffed from Woodrow Finance in this case, they actually had a reduced borrowing capacity due to the changes in circumstances and due to the increased interest rates. So their new limit was around $460,000. So in this case, we ended up purchasing a 3-bedroom, 1-bath, 1-car townhouse, which is on the street frontage, which means it has that more house appeal. This block of townhouses actually has some houses set back from the road, but it uses those thoroughfare type roads through that townhouse development to get access to those townhouses. So we preferred the townhouse with the street frontage. It's easier to drive up to. It has some more curbside appeal. So that's one of the things we liked about this townhouse. As you can see on screen here, we've got a garage here on the left, a front door just next to it, which leads into the kitchen and open plan living. And then we have a couple of bedrooms upstairs along with the bathroom. You can also see on the right-hand side here that this is access way to the rest of the townhouses in the complex. And there's a few access ways. This isn't the only entrance point to this townhouse development. There's a number of entrance and exit points, which is a good thing. It means it won't have too much flow through traffic next to this townhouse. Moving on into the home, you can see this property has a brick wall, some gyprock around it, a modern ceiling fan, and this is the entranceway that you see here. So room for a TV, a couple of couches, and some space to hang out. Then you've got a kitchen, which is quite modern. It's not 2020s, but it's around that early 2000s. It's a nice flat pack kitchen, very basic cupboards, good handles, room for an oven, a fridge, the sink looking out over to the backyard. We've then got the dining area, which is not overly large, but that's to be expected with a townhouse purchase. A ceiling fan above, access into that back courtyard, which is quite a nice space. And then again, dining area in front here. This is a view of the open plan kitchen and living. You can see it's not a massive townhouse. It's a reasonable size, and when I reveal to you the price, that will reflect that as well. So a couple of ceiling fans, you can see the aircon at the end, which is very important for tenants, and good usable open space here for modern living. This is the upstairs bedroom. So again, ceiling fans, large windows, good space in the bedrooms. The next bedroom here, again, fitting a nice large size bed. And then the third bedroom, which was a bit smaller, but that's to be expected again with a 3-bedroom townhouse, that the third bedroom's generally not going to be too large. Typically, when we're looking at a floor plan for any house or townhouse, we like a 3x3 square meter room at a minimum. That's the ideal scenario. We like ceiling fans and we like air cons. We're looking for amenity. We're looking for what tenants are going to look for in these spaces. So typically this third room would be used as a study or an office space. The other bedroom might be for kids. And then the master bedroom needs to be oversized, typically with some extra storage space, because that's where the renters are going to be paying. Those are the people who are going to be paying the bills. So you want to make sure that room ticks their boxes from that point of view. You can see the bathroom here is looking a little bit tired and old, but that's okay. It's more than serviceable. It's got a fairly reasonable toilet. You can see that the bathroom's a bit grotty around the edges. Again, the cabinetry could be updated down the track, but that's okay. This is an investment property. It doesn't need to be perfect or beautiful out the gate. It does need to be serviceable and livable and in a reasonable condition for the tenants. But down the track, the clients here could add value, maybe upgrade the bathroom, put in a new vanity, upgrade the mirror, update the bath and the surrounds, and add value to the property. You'd be looking to spend about $15,000 to $20,000 on an upgraded bathroom, which I think would be money well spent in about 5 to 7 years' time, as this bathroom gets a little bit more tired down the track and does need that facelift. This is a view of the back courtyard, obviously very low maintenance. There's a concrete pad essentially, a gate to access out of the townhouse into the rear space towards the community pool, and then there's a clothesline here off to the side and a couple of palms as well. So really low maintenance backyard, couple of fences, space to sit, space to hang out your washing. That's all you really need from this townhouse. And again, like I said, it does have a community pool, so there are a little bit of strata fees and costs associated with that, but there's no other big costs associated with this townhouse complex, which is nice. So a swimming pool in the middle, which kids and families could use, but also no other additional costs, which is nice. This is an aerial shot you can see here of the townhouse. And that's the street side that we were talking about with that street access. This is the access way for some of the townhouses in the complex, but like I said earlier, there are other access ways in this complex too. Now, as you can see on screen here, this was an LJ Hooker listing, and this is in a suburb called Eden's Landing. I will reveal to you the address now. So the address is 36/108 Overland Drive, Eden's Landing, Queensland 4207. And we'll have a quick look at the floor plan that you can see here. So this was the entryway. This was the open plan kitchen, dining and lounge space with the patio off the back. The 3 bedrooms upstairs. And like I said, that 3rd bedroom was a bit smaller and probably suitable for a study space. And then you've got the bathroom here. That bedroom 1 has access through the bathroom as well. You've also got the laundry downstairs in the garage and a single garage off to the left-hand side. So what do we think of this townhouse? Now, what did the clients pay? What is the yield? What are the future plans for this property purchase? My clients were able to purchase this property for $386,000, which is well within their budget. With the budget of $460K, buying a property, 3-bed, 1-bath, good street frontage, and good future value add potential in that bathroom with a bit of a cosmetic uplift, they were very happy with this purchase. Now, the property was currently under rented and it had a longer lease until February 2025. So given those factors and given other recent comparables had sold between $400,000 to $420,000 in similar complexes and even in the same complex in the last 6 months, we were wanting to get that discount on the purchase price. And that's why we were able to push the price down to $386,000. We were also able to get a discount of $2,000 on the building and pests for some issues we found in the home. For example, the garage does have a bit of water and mold in the ceiling, so that will need to be replaced down the track. And there was a little mold spot in the upper bedroom. We had a lot of rain here in southeast Queensland, and that spot did need to be repainted and recoated and repaired. So that's how we were able to negotiate down on the price and secure a discount on the building and pest as well. So given the property was only rented in the low 300s per week for the next 12 months, essentially what my clients were looking to do is tidy up those little issues. So have a handyman go in over the next few months and tidy those issues up. And then when the lease comes up in the next 12 months, move that way up towards market rate. Now, for this style of property, 3-bedroom, 1-bath, 1 car, good street frontage, air conditioning, good amenity, the property would probably rent in the low 400s per week. And so the client's view is to increase the rent towards market rent in a year's time when those rents come up. And that's also due to them wanting to build out their property portfolio. The yield does need to make sense. And so they will need to increase it in the future. This is one of the ways investors can get a better deal on properties. Owner-occupiers who were looking at this place were knowing they were going to have to wait about 11 months to get access to the property to move in. So this would have removed owner-occupiers from wanting to buy a property like this because it was under lease for such a long period of time. So if you're ever selling your own home or your own investment property, it's generally best to sell it with vacant possession. So you can sell to an investor or so you can sell to an owner-occupier. But this worked to our advantage in this negotiation. So longer term, we'll add value to the bathroom with a 15 to 20K renovation. In the short term, they'll need to spend that $2,000 on repairing the garage ceiling and repairing a spot upstairs with a little bit of mold. And in about 12 months time, my clients will look to increase the rent on the property and also order a revaluation at that point in time. This was a really fantastic purchase for these specific clients. Now, this purchase would not suit everybody. If you're more capital growth focused and you're looking to have more value add potential and you're more aggressive and you're less worried about the cash flows, then this style of property is not for you. But if you're starting out, you're looking to get your foot in the door, you're looking for a property that's going to have a higher rental yield longer term, you're looking for a property with a very small bit of value add potential that doesn't need to be done straight away, with the bathroom as an example, in the next 3 to 7 years time, then this type of property would really suit you as a buyer. If you're looking for those key criteria and some higher cash flow, lower maintenance, a property that you can get your foot in the door with price-wise, a lot of people are being priced out of this market. And so if your budget is limited and you're working with $300,000 to $500,000, a lot of the clients working with us in that price range are now looking at quality apartments in smaller complexes or quality townhouses in smaller complexes, where they can get that higher rental yield, have a little bit of value add potential, and look to build out their property portfolio over the long term. Property is the game of taking action. So many people sit on the sidelines waiting to buy $1 million home, waiting to build out the property in big chunks. And that is what Emily and I did. Our purchase prices were $800K for our first property, $550K for our second, $680K for our third. They were pretty big steps for our first 3 purchases. But not everyone's journey is going to be the same. Your journey is not going to be the same as mine. So as you look to build out your property portfolio, look at your borrowing capacity, look at your serviceability, and look at where you can take action. In the case of these clients, given their limited borrowing capacity and they were keen to take action, keen to keep moving forward in their property portfolio, adding value and creating some cash flow, to then go back to their broker and reassess in 12 to 18 months' time, this purchase was great for them. So look at your own situation and find a way that you can take action. Maybe that's some more savings if you're looking for a more growth focused property and you want to get up to, say, a $600,000 or $700,000 or $900,000 budget. But for other people, buying those smaller properties and building them with some more cash flow could suit you. So this property was located on the south side of Brisbane in Eden's Landing, and that's a suburb in Logan City Council. It is a landlocked area. It does have its own train line, access north to the city, access south to the Gold Coast, a suburb that's been built up over 30 years. We liked the numbers on this property from a longer term perspective and exactly how this fit into our client's portfolio. So if you want to sit down and have a chat with myself and break down your current property portfolio and what steps you might want to take next to continue growing your asset base and continue growing your cash flow, head over to purposeproperty.com.au to book in a free strategy session with myself. We'll go through all those things, walk you through our process, and chat about how we can help you take the next steps. So I hope you've enjoyed this recent client purchase breakdown, especially if you've got a limited budget. It's been great breaking this down. Leave a comment down below, leaving your thoughts on this property purchase, and I'll see you in the next one. Peace.